Well, first, folks, thanks for joining us for our 30-minute Homebuyer Blitz. For those of us in the industry, you're going to learn some new products that I think will help us in this ever-changing market. There's opportunity for people who were pushed out of the market over the last couple of years to come back into the market. It's actually a great time to buy, even though interest rates have gone up a little bit. Property values are leveling off. Sellers are a little more willing to work with us right now. So it's a great time to start the home buying process. We're glad you joined us. So Debbie, why don't you walk through us a little bit of why it's a great time to buy?
Well, as I say, welcome. And here's some frequently asked questions that we get all the time. Why should I buy a home instead of renting? That's the most important question, and we're going to cover that. Who should buy a home? Well, of course, you should. And who can help me? That's easy. You have a whole team of people on this video call right now that are honored to help you. What do I need to do first if I want to buy a home? The first thing is really to contact the lender and try to find out where you are. We don't want to show you a house that's above your comfort zone. So let's find out what those numbers look like. Now, the next four things are fears that people have. What if I have a low credit score? What if I file bankruptcy? What if I had a foreclosure? Or what if I have student loans? Well, all these things are fixable. So nobody's problems are anything that we've seen. We've seen these things, so don't worry about them. They're fixable and we can help. When is the best time to buy a home? The best time to buy is as soon as you can afford to. Because like Brent always says, you have to pay to live somewhere. You have to pay to live somewhere, so you might as well be paying yourself. Where should I buy a home? This has to do with buying a home sometimes in designated areas so you can get grants or you can get no down payment. How much house can I afford? That's for Brent and Nick. They'll work with you and figure that out. How much down payment do I need? You know, this is a question we get constantly, and the most frequently answered is 20%. 20%, but that's not true. There's a lot of circumstances where you can get 0 down or 3.5% down, but you don't need 10%, 20%. You don't need those high numbers. Why should I buy a home instead of renting? The most important reason is why we want you to start accumulating generational wealth. You cannot do that when you're renting. It's impossible. Homeowners have a 40% greater net worth than renters. And it's easy to see. It's because of the equity that you're going to build up in your home just by staying there and paying your payments. You're going to build wealth. Increasing gap in family wealth. This is getting bigger and bigger. You guys have all heard about creating generational wealth. That's what we want to do, and you do it by home ownership, not by renting. And the rents are skyrocketing. You all know that. You're probably in the rental market and you can see it.
Yeah, Debbie's 100% right. Rents are going to go up. I work with a lot of financial advisors. Two things are true, right? 67% of the average American family's net worth is tied up in their real estate. Most of the generational wealth passed to family members as far as the estate. Most of the wealth is the property, right? So building generational wealth starts with real estate. Real estate is the best performing asset over the last 50 years. It beats the stock market, it beats cryptocurrency, it beats anything else. And when you add on top of it that you have to pay to live somewhere, nothing does more to build your own financial future and generational wealth than building real estate, as this slide's here, right? Family wealth is really driven by your real estate. So Nick, to start that process, there's special challenges in home ownership.
Yes, the two biggest challenges that most people face are challenge credit and no savings or cash to close. And there are ways to overcome both of these things. So what if I have a low credit score? Now, if you have a low credit score, that does not mean that you're a bad person. That doesn't mean that you have bad credit. We don't turn anybody down here, for qualifying. We will work with you and we will set up an actual program for you so you can achieve home ownership. Now, bad credit or credit at all, it's just a snapshot in time. Bad things happen to good people. Life happens. So your credit is always going to fluctuate. Now, credit can be repaired, and there is a process to it. Some things take a little bit longer than others. Some things could take 24 to 48 hours to get your scores up 40, 50 points. Others might take a month or two, but everybody's credit can be improved. So lenders use different credit scoring models to gauge risk. And the one thing that a lot of people don't understand is there are different scoring models. For instance, what we pull in the mortgage business is going to be different than the credit scores a car dealer will see, or if you get credit cards, even Credit Karma. So most credit score services like Credit Karma, they're not actual credit, valid credit scores. They're good for tracking trends, but you cannot use that score to apply for a mortgage. There are different versions, like I said. So with TransUnion, Equifax, and Experian, sometimes there's 7 or 8 different versions, and those versions, depending on what you're actually applying for, whether a credit card or not, will weigh the different things on your credit and the different payments on your credit differently. So inquiries also and credit usage do impact your credit score as well. Now, when looking at the breakdown, the biggest thing that's going to affect your credit score is payment history. That's going to be about 35% of your overall score. The second thing is the amount owed. So if you have let's say a $5,000 credit card and you owe $5,200 on it, that's not gonna score real well. If you have a $5,000 credit card and you owe $1,000 on it, that's gonna score very well. Also, when you apply for new credit, you're going to have an inquiry, you're going to have a new account that's going to show up on your credit report. That's going to weigh a little bit initially until you start making payments on that. The length of your credit history does matter as well. The longer you're paying your bills on time, the better your scores are going to be. And also a credit mix. You don't want to have just, let's say, one credit card or an auto loan, a mix of a mortgage, a good credit card like a Visa or MasterCard. We really don't recommend a whole lot of store cards like a Kohl's or Macy's. They don't score very well. And actually with that credit, keeping your balances as low as you can. So going back to credit repair, can it be done? And some of you on the call this tonight, we've already spoken about this. So yeah, the first thing that we do is we make sure that everything on your credit report is reporting accurately. There are more times than none, something on your credit report that you think you've paid off, the creditor did not actually report it paid off, or you might have paid something on time and they're reporting as late. That happens a lot, believe it or not, with student loans. So what we have at our disposal here after we pull the credit is we have simulators that we can go into and let you know if things are removed, if you pay a certain credit card down, what is going to be the optimized way to increase your credit with the lowest amount of money possible. We can do that, and that's something that I do with every single client that needs it. So in improving that credit score does take time, but it can be done.
So Debbie, does it work?
Oh my gosh, it does work. Now, we have, between the three of us, we have hundreds of success stories, but this is one that I really like. I had a booth with real estate information at our local county fair. And a young man came up to me. He looked very, very distressed. And he said, I need help. And I didn't know what was wrong. I mean, the guy had tears in his eyes. He had his 12-year-old son with him. And I was really concerned. But then he told me that he had just filed for bankruptcy that week. And he was convinced that he would never be able to buy a home and provide for his son. I was relieved that his problem seemed to be manageable to me. I asked him if he had a job and he said yes, and he was very proud of the income from his hard work. I reassured him that he could buy a home. We just had to figure out the best loan program for him. Now, one of Brent's loan officers was there at the county fair with me, but he had just left. So I asked Evan to give him a call. Well, they chatted that night for over an hour. The loan officer stayed with Evan for 2 years because at that time, that was how long you had to wait after bankruptcy in order to settle on a new home. He settled 2 years and 2 days after he filed for bankruptcy, and with a credit score of over 750, which qualified him for a really good program. But now I think, Brent, is it true that you have programs now that you don't have to wait those 2 years?
1 day.
1 day. See?
Right. So, the key here, folks, is everybody that's on this call, and I've been doing this, obviously you can tell from a picture, I'm the oldest one on the call. So the reality is you can buy a home today, right? There's a path for home ownership for everybody. There's unique programs to do that. And it's a great time to start the process, right? One of the things about real estate is the quicker you move, the better opportunity there is for you. If rates are moving in one direction, you want to buy now because you want to buy before rates go up. If rates drop, which is great, you will be able to refinance. So there are success stories that are abound, and we can help everybody that's on the call today. So how do we start the process, Nick?
All right. So the biggest thing on the mortgage loan process is being very, very detail oriented. Details, details, details. The accuracy of the information that you give, nothing can be hidden with today's technology. So the best thing to do is, if there's any issues or anything that you think is going to hinder you from buying a home, tell us about it. Let us work through it. The more information that we have, the more proactive we can be. Everything gets verified. If you say that you make $10,000 a month, it's going to be verified. If you say that that you've lived at a certain property or rented a certain place for 3 years, it's going to be verified. Now, how quickly can you respond to us is very important as well. So we can only work as fast as you do. So if you're being responsive, getting us the documentation that we need, the faster that we can make some decisions and get you on the path and come up with a game plan to help you. And also do things right the first time. This is very, very important, which means if we ask for documents, if we ask for bank statements, if we ask for, a rental history, that doesn't mean a quarter or half of a screenshot of a bank statement and the rest of that bank statement be screenshotted to us 20 or 30 times. These things take up time and resources. So try to get everything to us the right way the first time. If you're talking to somebody, another lender, another loan officer, somebody else in the business that says, don't worry about giving me this, I'll get an exception for it. They don't make that decision for the exception. The underwriters and the written guidelines do. So instead of getting an exception or trying to get an exception, let's get the documents that we need up front. Let's come up with a game plan and let's present your case to the underwriter the right way. What are the standard documentation that you need and that you might want to get together if you haven't applied yet? If you're a W-2 employee, we're going to need the last 30 days of pay stubs. If you get paid bi-weekly, that's 2 pay stubs. Your last 2 years of W-2s. We may need the copies of your tax returns the last 2 years. If you're self-employed, we're going to need your business tax returns as well and the year-to-date profit and loss. Now, with your assets, whether you have bank statements, whether you have an IRA, a 401k, a savings account, stock accounts, we're going to need 2 months of statements of those. So let's get and that means all pages. If it says if you're looking at page 7 of 7 and it's blank, send that to us as well. Now, what types of loans there are, and what is an FHA loan, which is the most popular loan for first-time home buyers, and, you know, home buyers in general. An FHA loan is a U.S. Federal Housing Administration guarantee. Private lenders like banks and credit unions issue loans, and FHA provides the backing and insurance for those loans. If you don't repay your loan, FHA will pay the lender instead. Because of that guarantee, lenders are willing to make substantial mortgage loans in cases when they'd otherwise be unwilling to approve loan applications. What does that mean? FHA will work with lower credit than a conventional loan and will allow lower down payments, like 3.5% down. Flexible credit, you can go low, you can have lower credit scores with FHA. And the qualifying debt ratios. If anybody does not know what the debt ratio is, for instance, if you make $1,000 a month and your mortgage payment is $470, your front end debt ratio is 47%. If the rest of your debt is an additional $100 to $570, your back end debt ratio is 57%. So they will actually go higher with you having less disposable income every month. Also with FHA, FHA is more flexible with grants. Your family can help. You can get gift funds for closing costs. And the FHA loan limits have actually gone up significantly in the last few years. The DC area, which we all know is very expensive, you know, you're around $970,000, and Baltimore is at $647,200. There's also USDA and veterans loans. A United States Department of Agriculture loan, you can do 100% finance. It's a little bit different guidelines than FHA. But when you're looking at a USDA loan, that doesn't mean that you have to buy a farm, have corn, have cattle. There's plenty of areas and pockets, you know, in the Maryland area that are USDA eligible that are near suburban areas. And of course, with a veteran, if you've served in the military and have gotten a DD 214 or even active military, you can buy a property for 100% of the purchase price.
So that is a big question. Debbie brought this up, right? What is the question you have? How much do I need? How much down payment do I need to buy a home? The reality is, in some cases, it's actually zero. How many of us can buy a home today if zero is the down payment? Well, there are programs we have that will allow you to do this. You know, one of the things you've learned in the first couple parts of this is that there's always a path, right? Everybody here can be a homeowner. Time and motivation equals home ownership. So it may take a little bit of time, it may take some partnership, but everybody here can buy a home. Now, one of the things that we like to use is what we call other people's money. To Debbie's point, there's ways to get help in buying a house, whether it's a down payment or closing cost. So there's state and local housing financing agencies that we work with. There's plenty of grant money that's available. Depending on where you buy, there'll be grants that we can stack, where we put one grant on top of another that can make up for your down payment, your closing cost. City or county administrators, there's county grant programs we work with, city grant programs. Employers in the city of Baltimore, for example, many employers enlist what they call the live where you work, where they'll put grants for people looking to buy in the Baltimore area for companies that work in the Baltimore area. And then nonprofits. We work with several nonprofit organizations that can help you with down payment assistance. But there are other people that can help, right? The buyer can come up with money, but the seller can help. The lender can help. The realtor can help. Family members can help. We have other grant programs that we're working with other groups that can help you and buy a home. In reality, today, we have programs that you can buy a house with no money down. If you get seller help, you can buy a house with no money down and no closing cost either. So you just have to work with the right lending partner and realtor partner to help you understand where those opportunities are. So do you have fair credit? Fair credit means a credit score above 620. Do you have stable employment? Would you like to buy a home today? And if you make less than $168,000 in the Baltimore area or $206,000 in the DC area, we have a special program we call the FDM FHA 100. This program provides 100% financing for folks that want to buy in these areas that make under those income limits that we talked to. You don't have to be a first-time home buyer, but today, for the cost of rent, you can buy a house with no money down. So how does it work? Now, the interest rate on this program is a little higher. That's okay, because you're worried about the payment, not the interest rate. The interest rate market is moving in the wrong direction. But today, for example, If you bought a house at 350,000, and by the way, there's 3,651 active listings in this area, they're priced under $350,000, right? We're talking about the DC, Maryland, and Virginia, Delaware marketplace. At 350,000 purchase price with an FHA loan under this program, your net payment would be $1,885. The average rent in this area is $2,500. Now, think about this. I can buy a house today with no money down at current interest rates, and my payment would be less than it is in renting today. So if I can show you how to buy a home today, or Debbie and her team can show you how to buy a home today for less than you're paying in rent for little or no money down, you should probably look at home ownership instead of renting. How hard is the process, Nick?
It's easy. It's easy.
Oh, it is an easy process. We lost Nick, I guess.
No,
Okay.
no, I'm sorry. I had the mute on.
And then
So-
now I went too far. Sorry. Hold on. There we go.
One more.
How hard is the process?
There we go.
Right.
Yeah. The process is only as hard as the team, the team that you're working with, and how you communicate with each other. That is the biggest thing right there. You know, you want to work with an experienced lender and a realtor that know the programs, that know the market. You know, we want to create that home ownership plan together where everybody's on the same page, and the plan that we create is obtainable. You know, you always want to get the pre-approval first before you go look at properties. You know, and you've got to be committed to the process. This is a partnership. You know, there's a lot of time and effort put in, you know, on all sides, and we want to make sure, you know, that we're all on the same page. And like we said before, details matter. Be as accurate as you can with your information. Communicate, respond quickly. Like we said, we're only as fast as you are with getting, you know, responding to questions, getting docs to us that we need. That's very, very important, you know, and, you know, have as much of a, you know, your loan documentation ready, you know, at the application time. You know, that will save time as well. And when we are available, whenever you need us, we are there. You know, we don't work bankers hours, you know, and anytime that you need, it's early morning, late at night, we're here to answer your questions, you know, at any time.
So Debbie, when's the best time to buy a home?
Best time is now. The best time is when you're looking at that rent going up and you just can't afford the rent anymore. A lot of times it's cheaper to buy and it's easier to buy if you have a marginal credit score. The rental credit scores are getting outrageous nowadays.
It's
It's
actually more
insane.
difficult, right? It's actually more difficult to rent than it is to buy today. You know,
Yes,
landlords, a lot of them are institutional investors, right? They've raised the credit threshold to rent. They're also requiring, you know, additional down payment and security deposits. So actually, home ownership can be much more affordable than renting today. If you are renting, what I can tell you with 100% certainty, your rent payment will go up in 23 as soon as your lease expires.
yes.
So why buy now? We kind of shared a little bit about it. We're going to give you a new path to home ownership, monthly savings compared to rent. That's true in today's market. It's going to get even more difficult to rent than it is to own. As a homeowner, you get an income tax deduction you do not get with renting. Your property taxes and mortgage interest are deducting. You're creating net worth. This is really important, folks, because every time you make a rent payment, your landlord benefits, they build wealth. Every time you make a mortgage payment, you're building wealth. You're increasing your equity. You're paying down your balance. Your house is appreciating over time. You also get a higher credit standing, as Nick shared with you. Once we move you into the homeownership property, that is actually going to be a boost to your credit score. So it actually helps you in two ways, right? Your credit score goes up, which will help lower your cost of other credit. Flexibility, make a house your home, decorate your taste and preferences. Now, this is Nick's contact information. But before we do this, we want to share a little new path to home ownership. We created a new way to own a home in 2022. A lot of folks weren't mortgage ready over the last 2 years. They had unique challenges. And what we've done with Debbie and her team, and we've come up with a new creative way to own a home, and it's actually a rent to own or lease to own solution. So we can take folks that weren't quite mortgage ready, could have been credit, could have been income. I don't have enough time on the job. Maybe I'm an I-10 buyer, I'm an undocumented citizen. I haven't had a path to home ownership. So we're creating that path to home ownership for you today. So how does it work? It's the next generation of home opportunity. If you are renting today, and you don't think you have the cash to buy a home today, or you were turned down by a mortgage by any other lender, we have a solution for you. Who does this work for? First-time home buyers, self-employed buyers. They were really hurt by COVID-19 restrictions. Maybe they haven't been self-employed for 2 years, which most programs require. 1099 and gig workers, right? This is a new economy, right? Uber drivers, Lyft drivers, independent contractors, this whole new gig economy. The banking industry hasn't caught up with that yet. So we've created a new program to respond to that. You just relocated into the area and you're not sure what you want to do in the home buying process. You have a new job. Student loans can be one of the biggest hurdles to home ownership, looking for an FHA loan or Fannie Freddie loan. We have a solution for that. Recent college graduates, as we shared at the opening of the car, if you're an undocumented citizen, I-10 or DACA, this can be a perfect solution for you with a low down payment option. And if you have credit issues preventing mortgage approval at any time, this is a path for you to become a homeowner earlier. How does it work? We'll take borrowers with a 580 credit score under this program. We also look at non-seasoned W-2 income. What does this mean? This means if you're looking for an FHA loan, you have to have a 2-year history of working with W-2 income. In this program, we're not looking for a 2-year history. We will actually look at a year-to-date history. If you have a second job and your previous lender couldn't count that to qualify, we'll look at that based on a 1-year, not a 2-year income. Same with overtime, bonus, and income. We use the actual income for variable hours instead of a 2-year history. These are all key things that can take people that have been turned down by another lender and turn them into home ownership today. If you're self-employed, FHA requires you to be self-employed for 2 years. We do not under this program. Your tax return doesn't represent your actual income. Interesting, accountant's job is to reduce your tax burden. How do they do that? By reducing your taxable income. That's not consistent with what a lender's looking for. They're looking for more income to get you to qualify. We actually have a way to use this off of cash flow. Because this is a lease to own program, you actually have an equity interest in the property. You get to deduct the taxes and interest, even though you're renting the property. Cash to close. We'll take a gift from a non-relative. We don't need to season the gift. We don't need to source and where the gift came from. These are all powerful tools compared to an FHA loan. I-10 borrowers, no credit score is okay. And to Debbie's point, you don't have to wait 2 years. If you had a foreclosure, if you had a bankruptcy, you had a short sale, we can do those one day after those occurred and give you a path to homeownership right away. Why would we do this? Because we want to provide a new path to homeownership. We realize the last couple of years have been different. There are a lot of opportunities out there for folks that aren't quite mortgage ready. And how do we give them a new solution to buy a home? What do? You get to build equity during the lease. You've locked in an interest rate. This is very important. In today's upwardly moving interest rate, the interest rate that we put you in when you're doing the lease to own property, that interest rate is fixed for you. So when you actually take complete ownership of the property, your interest rate is fixed. You lock in a purchase price. As property values are going up, the purchase price in your rent to own, lease to own program is set in stone. So you don't have to worry about property values going up. We actually provide support services to help you gain financial success. We don't want you to go this alone. So we have a 24-hour day, 375-day help desk to help you with your financial path to home ownership. We actually have a home care program that helps you with the maintenance of the property as well. We also help you make the right selection for a home before you have to make a 30-year commitment. If for some reason you want to get out of this process, there's ability to do that, and you just become a renter instead of a rent to own process. So it's safe, it's flexible, it can help you become a homeowner today. So we've given you in I went over 4 minutes, but we've given you some paths to homeownership. We're here to answer any questions. Debbie, what's the next step?
Well, the next step is just give me a call. My information is right there. And then we'll discuss your needs and where you want to go. And then after you talk to me, we'll get you over to Nick and he'll get you pre-qualified, because I never want to take you out to see homes before you know exactly what your comfort level is. And listening to Brent go over those programs, gosh, I wish I had those 2 years ago. There's so many more people I could have helped. especially with the TIN number with 3.5% down. That is going to be a fantastic program.
I
So
think that the lower
no
credit
reason to
score
wait.
opportunity and the cash to close relief will help. We had a couple questions in the chat box. David asked, do VA have required closing costs? Yes, the state closing costs don't really change, but with a veteran, you have a lot of flexibility in how we can pay for those. We can actually stack grants on top of VA loans so they can come up with 100% financing and no closing costs. Program for Baltimore City and Baltimore County. I think Nick answered that, but the reality is we do have Baltimore City, Baltimore County programs, but we also have programs, the one I just shared with you, which are rent-own, lease-to-own program. That actually is national for us. So it's not limited to any geography. The only thing we will not do, we will not lend to properties in a flood zone under that program, and we will not lend to mobile homes under that program. But that program, the rent to own program with low down payment, is available in our marketplace as long as it's not in the flood zone. So, oops, sorry. Any other questions, folks? Because I know we said it's a 30-minute blitz. So if you haven't guessed, I speak fast, right? So you have to get it under a 30-minute time period. But for everybody that's on this call today, everybody that's on Zoom, one, congratulations for taking the first step to homeownership. Number two, every single person that joined us on the Zoom call today can become a homeowner. You have to work with the right team. You have to be committed to the process. Some of us will be immediate homeowners. Some of us might be a homeowner in 5 or 6 months. What I've learned in 37 years of doing this is time and motivation equals homeownership. Every single person can be a homeowner. Now, for the realtor partners that are on Debbie's team, think about everybody that lost out on the opportunity over the last years. Could have been credit, could have been cash to close, could have been they couldn't get a seller to accept their deal now, but the market now has changed. We're going to say it's now balanced. It's more normal. So sellers are rethinking their expectations in today's market. So everybody that you missed out on over the last 2 years can come back into the market today and be a homeowner. So it's really a great time to buy, folks. Let's not get concerned about interest rates. We want to focus on where you're comfortable from a payment standpoint and how does that compare to where you are renting today, because rent is going to go up. If you can fix your housing expense through homeownership at a payment that you're comfortable, it's the right decision for you today, regardless of where the interest rates are. Any other questions? Okay, David, you had a 593. We can work with you on this program, and Nick can also coach you on it. You'd be surprised on moving a couple things. We can get your credit score increased. What's interesting, folks, looking at the credit score world, right? People don't, because credit scoring companies and lenders trick us into doing things that negatively impact our credit score. So everybody has credit challenges, right? That's why I say nobody has bad credit, because I'll give you a good example. They give credit cards to college kids with no jobs, and then they get confused when college kids charge on the credit and then they can't pay it because they're not working, right? So it negatively impacts their credit score. So, these little tricks get us into a negative credit spiral. So that's why everybody can work with credit. There's no challenge credit, but under this program, we have a 580 minimum, so you will qualify at that level. So, Emil, we would be happy to meet with you. Nick, can you reach out to Emil? We'll talk to you about these offers because we want to help people today. I think right now, and I am rather altruistic in this, I believe everybody should be a homeowner. I think that is the first step to building anybody's financial future. I think it is also the first step to help build families' financial future, right? We can change the directions of families. And I think that's really important to us, right? This is not hokey for me. I've done this for 37 years. I've seen the impact of it. So collectively, the team that we have together, we can do that. We can affect change on the direction of families. And that's one thing we want to do. The market's changed a little bit, but I think that's creating for opportunities for people pushed out of the market over the last 2 years. So we want to seize on this opportunity now. So Emil, we'll reach out to you and get to meet with you and talk a little bit about those opportunities.
Yeah, just give me a call anytime. My information is on there. Debbie has it. So yeah, cell phone anytime, whether 7 o'clock in the morning or 11 o'clock at night, I'm available.
I'll text her the information right now.
Okay. There's David.
Perfect. Well, folks, thank you, everybody. Thank you for spending the time with us. We really appreciate it. It was great meeting everybody.
Thank you.
Reach out to us.
Hey, David, look, I see you now.
Right. There we go. And And every one of us that joined us today, we can help everybody become a homeowner. So we're excited to do that. And thank you for joining us tonight.